Hello, my name's Brad Teal and we're here to give you an update of the prospects of what 2017 will bring to the property market. This is our February market snapshot, and with me I've got Prue Bryant, who runs our whole rental department at Brad Teal Real Estate across the 10 offices, huge rental portfolio, and she's got all of the information that you're going to need to, particularly if you're a landlord, make some decisions about your rental going forward. But this year, as we've opened up, we've heard the government continue to talk about jobs and growth, and we've heard the opposition talk about negative gearing, and we've had a discussion earlier in the week about whether there'll be a capital gains tax applied to the family home, and Donald Trump, well, who knows what he's going to do. But one of the hot topics in real estate is housing affordability. I can't afford to buy into that area. Or is it that people's aspirations for where they'd like to live are actually greater than their wallet will provide them? But to talk about that, we thought I thought that I would invite Prue to give us her insight into what has helped Brad Teal Real Estate have a record month in renting for the month of January just past, and talk about housing affordability and how sales affordability affects the rental market. So Prue, welcome to 2017.
Thanks, Brad.
And you've had a really busy time in January, haven't you?
It has been extremely busy. Our department's actually rented 123 properties. This time last year in January we rented 90 properties, so that's a huge difference of 33 properties. And we have got very limited stock, so everything that we're actually renting out is renting within 1 week, or we're actually advertising, not even advertising properties. We're also going to do listings, and within sort of like appraising a property, and then by the time we're advertising the property, it's actually increasing in price, particularly for the areas around Ascot Vale, Moonee Ponds, sort of like Essendon areas, so that's really positive.
I noted the other day, the girls in the rental department here at Essendon were talking about getting multiple applications on homes and people offering to pay 6 months rent in advance or $50 a week more to try and make that as an incentive. Mm-hmm. And you would know this, but I'm a little bit against that, because we set the rent and someone shouldn't be favoured on an application because they have more money than the next person, or they're trying to build an incentive for a landlord to rent to them over and above someone else on the favour of more money.
Yeah,
what's your take
and that
on
doesn't necessarily mean that they're going to gain that property. So at the end of the day, it's ultimately the landlord's decision who they actually decide to have live in their property. So whether somebody's prepared to pay more money or not doesn't necessarily mean that we're going to put that to auction, for instance, and achieve the most money. We as an agency obviously try and get the best possible tenant for the landlord and also the best possible price.
And quite often the best tenant is one who is credentialed correctly, not the one who is offering the best incentives. Yes. So given that, are you seeing a transition from people frustrated, can't buy at auction, defeated by the property market mentally, and they are shifting to say, I'm just going to rent. I can't stand missing at auctions. I've done all of my homework and I'm part of this frustrated market that is thinking they'll buy for 800,000 to 900,000 and a home sells for 950 to $1 million. Are they shifting back into rental?
Look, I know that there's, it's a hot topic at the moment, the housing affordability in Australia, but I actually think that there's certain people that are lifetime renters, which they choose to rent in certain areas. It doesn't necessarily mean that they can't afford to buy a property, because I know lots of people that will choose to rent in, say, the Essendon area, but they actually have investment properties in other areas.
So they have investment properties, but they're choosing to rent. Yeah.
Mm-hmm.
In regard to the buoyancy of January, what's the reason for that?
Look, January is typically a very busy month. That's just because it's the start of the school year, it's that, people are relocating, things like that. So it's always a really, really busy month. But I do think that the massive difference between 2016 and 2017, I think, is just purely because there are a lot of people out there looking to rent, and it's just a really buoyant market. Rents are increasing, but we've also got a lot of people inspecting the properties. So some of our inspections are actually getting 10, 15, 20 different groups of people through, which is really positive.
Open times. Amazing.
Yeah.
So now, quiz. Unaffordability, what's the number one? I know what it is. I'll give you a guess. The most unaffordable city to buy and rent in the world?
Hong Kong.
Oh, you've looked at the figures. What's number two?
Sydney.
You've looked at the figures. Where's Melbourne sit?
6th.
You have looked at the
Did you know
figures.
those
I knew
stats?
those. I knew them because I looked at the
I think
table
you
as
asked me
well.
'cause you didn't know.
So, Melbourne sits number 6 on the table of unaffordable cities in the world, and New York and London and Tokyo, Rome, Hong Kong's number 1 and Sydney number 2. So that's an interesting statistic as well. So in regard to first home buyers, are you seeing them frustrated and shifting into rent until they buy?
Well, look, I think overall in Australia, the statistics show that there's a less first home buyers in the market. But I do know that in Victoria, there was an increase of home buyers. We've got, I think the statistic was 19.3 more first home buyers in Victoria. So I don't think that we in Victoria have a huge problem with the first home buyers. And I do think that first home buyers are investing in the market. So it's just that they're not obviously able to invest in a property that's got a water view, but they're investing, they're just having to lower their standards.
In regard to 123 properties let for the month, is there a hot spot? Like, is Brunswick on fire?
Ascot Vale.
Ascot Vale?
100%.
Why Ascot Vale?
Close 7 kilometres from the city, has a lot of amenities, it's got the Melbourne River. Typically when our BDM Karen goes to actually list properties, that's one of the suburbs that she's going to list the properties. She might be saying the property's worth $600, and then 2 weeks later or 3 weeks later when we need to advertise and market the property, we're finding that we can actually achieve a lot more. Soon as we get stock, it goes straight away.
Other markets, Gisborne and Sunbury?
They are actually really strong markets. We don't have a lot of stock. We've got, I think, 2 properties in Gisborne and 3 properties available in Sunbury, which as soon as we're getting them listed, we're renting them out.
Yeah. Fantastic. All right. Well, that's a quick snapshot of what's happened in January and the prognosis going forward from Prue. She's the guru, dominating the northwest of Melbourne through 10 office network, huge portfolios and highly trained staff, but above all, the best systems and the ability for landlords to minimise their vacancy factor. That's one of our main aims. Always achieve the highest rent, really strong qualification and assessment of tenants, and that's Prue's role. So thank you, Prue. And we'll see you in a couple of months. We do this 3 or 4 times a year, so we'll see you shortly.
Thanks, Brad.
Thank you.